Welcome back. Let's answer some of your questions. Joe Terranova, to you from Joel in Florida. Your insights on Copart.
So Copart is a industrial name that I've been in and out of over the last 2 years. Back into it recently, Scott. I think they're going to see a revival in revenue growth once we have the economy returning to somewhat of a normalized state. Understand a lot of that revenue growth is going to come from the return of active automobile driving on the roads and unfortunately the accidents that will occur, the insurance companies writing off those accidents as a total loss, and that's where the salvage opportunity comes into play for Copart. So I like it here below $85. I think there's further appreciation for the stock.
Okay, thank you for that. Stephanie Link, Bill in New York wants to know about Corteva. Buy, sell, hold.
I think around here is where my cost basis is, and so I like this for the long term, but this is a ultimate cyclical stock, right? They're in seed and crop protection, and if you believe the economy is going to recover eventually, then they will do a very good job because they are the leader, and they have great market share, and they've got a very good management team. That said, you've got to be very patient because you have to see that recovery, but I do like it for the long term.
Josh Brown, Ryan in Pennsylvania for the buy the dip strategy. How much should the stock dip in order for you to buy?
So this is a tough one. If you're a trader, I think what you're trying to do is manage risk. And my preference would always be to manage risk systematically. So I think having a comfort level with a trailing moving average and making a decision of how much downside you're willing to take in each trade. Buy the dip, it works in the opposite way. Buy the dip is kind of like, look, I accept the fact that I'm going to buy a name and it might not be the best price. And if there's a lower price later, I am a buyer. I think on that strategy, it's really not about how many points it falls or what percentage. It's about what the news was that dropped the stock and whether or not you still like it in the wake of that news. So I would really say it's case by case, company by company. I would hesitate to give you a rule of thumb because rule of thumbs are the first casualty of that style of investing. It's the first thing you'll throw out when you get frustrated.
John Nigerian from Grayson in Columbia, Kentucky. I'd like to hear an opinion on Dropbox.
Just love it, Scott. 600 million users of Dropbox. This stock is one of them that has truly outperformed. I think beginning of the year, Scott, it was around 18 bucks. Now it's 23, so it's one of those that hasn't experienced the big drawdown dip and has just been going from lower left to upper right for the last several months, even in the face of this. It's one of them that, like right at the top of the show we were talking about, has the wind at its back. It doesn't need the face-to-face communication, and it's a collaboration platform that is working.
All right, good stuff. I always have a bonus one somewhere in here. So, Steph, I'm going to, before we get to round two, I'm going to give you a bonus one because Ryan McGee has just tweeted a good one, I think. Ask Stephanie if she's still buying Coca-Cola under 50 bucks. I've been adding. I'm long it. Thanks. What do you tell Ryan?
All day long. All day long. I still like the story very, very much. Obviously, they had a stumble in the last quarter, but balance sheet is very good. CEO is top notch, and they have great products that they have been introducing over the last several years. So absolutely, I like this, and you get the nice yield while you wait.
All right, good stuff. Thanks for that little bonus one. Joe, to you from Margaret in Wisconsin, DocuSign. Is it going to continue to grow post-virus?
Oh, I certainly think that it will. I think this crisis has revealed certain franchises that will be enduring in their nature, and I think DocuSign is clearly one of those names post-COVID that will have not only those characteristics, but certainly be attractive from an M&A capacity to a larger company.
Back to Stephanie Link from Albert in Ohio, Blackstone Group. Is it a sell? Is it a hold? Is it a buy?
Well, it was a 2019 story because that's when they converted to the C Corp, and that's when you had all of the funds flowing into the stock. So this year, obviously, they're going to get hit by fees and distributions and reduced realizations. But I do think the setup for 2021 and beyond is actually quite good, and the stock is very cheap. So I'm going to stick with it.
What do you think of Wells Fargo as well, Steph?
Well, Wells Fargo is kind of, I mean, any of the banks right now, it's just hard, right? With where the yield curve is, where the 10-year is. But I like this one because it's a turnaround story, and I have to be patient. I have a couple of years on this one. In the meantime, you have a new CEO. They have a very bloated cost structure that I think that they can reduce over time. And actually, this new CEO is also recruiting a lot of good, talented people as well from J.P. Morgan. So I think that I'll stay patient. I have the 8% yield while I wait, and I think that this one, for the long term, is a buy.
Josh, Doug in South Carolina wants to know about Cogent.
Yeah, small cap internet services provider. I don't know the name very well fundamentally. I would say it's found support right around here at that rising 100-day moving average. So watch that price. Let's see if the buyers come in like they have before.